And Mr. Griffin, I want to revisit this issue of payment for order flow. Payment for order flow has been around for decades, correct?
So I know it's been around for at least 1 or 2 decades. I can't answer before that period of time.
And it's a recognized and approved practice by the SEC, correct?
Yes, it is.
And payment for order flow is set by the brokerage firm, not the wholesaler, right?
It is ultimately a negotiated number, but it is a number that is set by the brokerage firm and not by us as the market maker.
Well, as a market maker that provides execution services to retail brokers, you are required to meet best execution requirements. Is that correct?
Yes, it is.
And in other words, market makers are required to provide the same or better pricing than the exchanges, correct?
That is correct.
And how can market makers offer that better pricing to Mr. Sherman's line of questions?
So there are a number of drivers that permit us to offer better pricing than what is available on exchange. The first is that exchanges have legally mandated minimum tick sizes of a penny. So if you look at a stock like AMC, it trades $5 bid, 501 offered. If the exchange could trade with a half-cent increment, it would probably trade $5, 0.005 bid, 501 offered, or vice versa. But the exchanges are limited to a 1 cent minimum tick size. And we have been clear on the record in prior testimony that exchanges should be permitted to have a smaller and more competitive tick size. That's fact number one.
Okay.
Number two is that the average retail order is much smaller in totality than the average order that goes onto an exchange. Because this order is smaller, and I'll share a number with you, the typical Robinhood order is ballpark about $2,000 in size. Because it's a small order, the amount of risk that we need to assume in managing that order is relatively small as compared to an order that we have to manage from our on-exchange trading. And as I'm sure you're well aware, we are the largest trader of stocks on exchanges in the United States. So
let me move to Mr. Tenev really quickly on that point. What impact might greater restrictions on the payment for order flow model have on your ability to offer zero commission trades?
We do believe, Congressman, that that's an important question, and payment for order flow helps cover the costs of running our business and offer commission-free trading to customers. When we started, people didn't even think that there was enough margin left to make this business work, but we've been fortunate to make it work and to make it work for our customers.
Well, let's talk about why Robinhood restricted trades. I think your explanation about margin requirements charged by your clearinghouse makes sense. Is your clearinghouse supervised by the Fed and the SEC?
I believe that's
are the margin requirements charged by your clearinghouse in turn approved by federal regulators?
Yes.
And did federal regulators approve the value at risk charge that was imposed on Robinhood?
I believe, Congressman, the value at risk charge is outlined in general terms in Dodd-Frank, but I'm not sure who approved the specific implementation of that formula.
So if anyone has a problem with your decision to halt trades, it's fair to say that their frustration should be directed toward federal regulation.
Congressman, I'm not trying to throw anyone under the bus and direct frustration anywhere. All I can say is Robinhood Securities played this by the books and played it basically the only way that we could remain in compliance with our deposit requirements.
Mr. Plotkin, I appreciate your testimony that Melvin always follows laws governing shorting stock, but Melvin lost $6 billion in 20 trading days. Let me ask you about your risk management. Did your short positions exceed float?
No, they did not.
Well, shorting has an important role to play in our markets, allowing for legitimate hedging and price discovery. But we are interested in naked shorting, and so we would hope that that you would clarify that and how it is that you make sure that you're first locating the borrow.
Shepard Smith here. Thanks for watching CNBC on YouTube.